Good morning, Ian.
Hey, morning. How's it going?
How are you? It's Friday and it's time to record the Friday edition of the Incast. And let's do this.
Absolutely.
All right, so a lot of action in all the things we usually cover: stock market, Bitcoin, crypto, cannabis, and Tesla, of course. But let's start with the stock market because that's where I believe the greatest amount of interest is in among our viewers. So let's start with that. In preparation for the Incast, I went and looked at a couple of things, which is we have talked in the past a lot about Apple's effect on the S&P 500 cap-weighted index, which is that it's probably still 6% or something like that. And I went and looked, and Ian must put this chart up, which is the equal weighted index now is up a little under 58% for the post-crash recovery. And the S&P 500 cap weighted is about 54.35. And I believe the primary reason for that is really the performance of Apple, which went down by about as much as 20% and now is down. Let me again pull this other chart up here. So it's down about a little under 14% versus negative 2% for the cap weighted. And the equal weighted is up about a little under 2%. So that's what's really going on. If people talking about what's going on in the market, when really it's all about really Apple, Microsoft, and like really primarily those two, because Facebook just made a new high.
Yep. Yeah, exactly. And a couple other companies like Berkshire Hathaway has a huge weighting in the S&P. That one has been way underperforming the whole time. They pretty much actually track the Dow Jones, which is we talk about all the time is like old world companies, America 1.0. So yeah, I mean the S&P 500 is actually not a great way to look at the market as a whole, even though it sounds like it because it has 500 stocks in it. So it sounds like it should be reasonably well balanced, but the equal weighted one is key because it shows that, if there's a rally in like housing, industrial, solar, which is what we've seen over the past couple of months, that those companies are way smaller than something like Apple or Microsoft. And that can have a really big effect on the equal weighted and on people's portfolios. But it has way bigger of an effect or way less of an effect on the actual S&P 500.
And then there's actually like news going on with respect to Apple and Microsoft in particular, which really dominate that cap-weighted S&P 500, kind of still dominate the Dow, and to some extent dominate the Nasdaq 100. And for now, at least the Nasdaq Composite, in the sense that Apple just released their latest phones to what I can only see based on social media as howls of protest. Because number one, they have decided to stop shipping their phones with a charger, which is kind of mind-blowing. And they claim it's for environmental reasons. Then from a design perspective, they chose to keep this very ugly feature that many people have hated. And I know this personally from so many people that had this reaction. They kept that notch thing up there. And then the third aspect is they stopped also shipping with headphones, with earbuds. And everyone is like, well, this is a pretty cynical way to essentially just kind of increase sales. And then Microsoft actually did something that really reminds me of some of their older worst days, which is that they mandatorily started to actually just shut down and restart computers so as to reinstall something that they wanted. In other words, their version of, I believe, the Office apps, where they automatically install it to your start menu. And this is really sort of really like the kind of behavior that generally you see when companies are really where they have the wrong focus.
Right. I didn't actually hear that about the iPhone chargers not being shipped. That's pretty crazy. I
Right,
don't think.
no charger, and they actually exchanged something about the charger as well, so that like anyone that's new would actually need now to go and buy a new charger, which is they're going to charge them $20 for.
Yeah, that's like a little while ago where they had that new computer come out and you had to buy the stand separately, and it was like
The $1,000 stand, right?
thousand. Yeah, right.
The
They keep
thousand
pulling
dollar.
these things. That's not going to be good. I mean, yeah,
Well, going back to the market,
yeah,
those are just like sort of incidental gossip about Apple and Microsoft because we took a lot of heat when we did our Ian cast on avoiding Apple, calling it the Death Star, and go and track back a bit to our video. I believe it was a few weeks ago on it. So I mean, hey, I'm happy to tell you, and like people, these are Apple fanboys that are really pretty angry at Apple.
yeah, yeah. I mean, other phones are getting popular. I mean, iPhone is really just US, and Samsung has total domination over most of the rest of the world. And Google, of course, their Pixel phone is getting way more popular. But yeah, back to the market anyway. About the Apple Death Star, if you didn't see before, we talked a lot about how Apple and companies like Microsoft that were worth over $1 trillion. Apple is actually worth over 2 trillion. The market cap, meaning the value of those companies that come out when people sell the stock and the price goes down, is actually like kind of funding smaller companies because at one point between the big four, which is Apple, Microsoft, Google, and Amazon, there was over $1 trillion. Those four companies lost over $1 trillion in value, which I mean can really fund like hundreds and hundreds of other companies. That's a lot of money that's taken out of just four stocks. And we saw a lot of companies like cloud software, solar, housing, all of these were making new highs, and a lot of them are still really close to new highs. So we're seeing the kind of redistribution of money into way smaller companies that have higher growth and better prospects.
Right, and more innovation and representing more opportunity and more growth. And many people seem to be unaware because they get their news from places like MarketWatch and Yahoo Finance that really act like they have no understanding that the S&P 500 cap weighted is dominated by Apple and Microsoft or even by Amazon and Google and Facebook, who I want to make clear we have no issue with because these companies are still actually continuing to grow, still actually continuing to pursue opportunity and innovation. However, sites like that like act like somehow the market means that like every stock is under liquidation, you should sell everything, there's some crisis. The virus is coming back. 2008 financial problems are coming. It's kind of crazy to read some of that coverage, Ian.
Yeah, I know because everything, like in the economy has been like crazy fast improving from, March and April, way faster than anybody expected. And yeah, and everybody is still kind of confused about how the stock market went up then and how it's still going up. But it's every time there's a drop, there's some big reason and some reason to sell and prepare for the next crash. So
Yeah, and many people are missing out. And we would tell you, please subscribe to our channel. If you like the content, give us a thumbs up, comment below if you're being misled by I don't know even to call them mainstream media. I don't really know what to call them because they're definitely not mainstream, and they're certainly not for Main Street investors because they are misleading people in a big way. And Amber, our amazing colleague Amber, reports on really the economy every Monday on Market Talk. And this week, actually, special treat, Ian. She's featuring for the first time our incredible colleague, Patrick Goodrich, who's going to be talking about IPOs, where a lot of companies are coming into the stock market, stocks of America 2.0, the fourth industrial revolution, stocks of the new world, really.
Yeah, I know. We've seen such a huge inflow of private companies coming public, and like they're all like cutting edge technology. And there was really, I mean, there still is pretty much a shortage of those kind of companies, but it was getting to the point where there was like hardly anything you could invest in that was really worth it in terms of innovation.
Right. So, I mean, we want to make clear that why we say we're bullish on the market and we are optimistic on the market and positive on the market, we are definitively not optimistic about the prospects for Apple and for that matter, for Microsoft or for the cap weighted S&P 500 because of the fact that it is very dominated. I think those two companies represent probably as much as 12, maybe 13% of those indices. And as long as those are such a big weight on what's called the market, you're going to see the S&P 500 probably just hover around certain places until over time, as Ian was talking about, people keep selling Apple, keep selling Microsoft, and use it to fund the more innovative, smaller, growth and opportunity-based companies that are, to some extent, there in the S&P 500. There's still plenty of stuff that's in the S&P 500. And you brought up Berkshire Hathaway, and it was something that I've been meaning to bring up. This is a company that, I mean, when I look at it, Ian, it looks like it's going to go to zero. I mean, again, as I like to say, the destination is certain, only the speed is unknown. You just look at the exposure. So in post 2008, I believe early 2009, they went and bought a railway company.
Yeah.
And
Right.
that's going to be wiped out by autonomy and applied to trucks and drones and new forms of transportation. Then the next big, well, not next big, the biggest weight in Berkshire Hathaway is insurance, banking in various kinds. And it's becoming pretty clear that crypto and fintech are going to take care of that. So there's all the companies of yesteryear that really were huge money winning stock picks by Warren Buffett and Berkshire Hathaway, Coca-Cola, American Express. I'm trying to think of the other signature picks that really represent Berkshire Hathaway. These are all companies that are stagnating in growth and have been stagnating in growth for really about a decade now, nonetheless, that demand for dividends has driven the demand for the stock, and they trade for these crazy, insane multiples relative to sales.
Yeah, absolutely. Yeah. And like you said, it's mostly at this point, old world companies, old finance. He has a lot of banking stocks in there. So yeah, and if you look at the price of Berkshire Hathaway, I don't think it's even really come close to the high that it made pre-COVID market correction. So yeah, it's the demand for these companies is running out. The demand for dividends is running out now that everybody sees that pretty much every kind of industry and everything you can imagine really is getting disrupted by something. But stocks like Berkshire Hathaway aren't catching up, aren't innovating, or aren't, Berkshire Hathaway invests in other companies, but they're not looking at the right ones. They're not looking at the ones that are innovating and really are going to make a change really over the next several decades.
Yeah, they also own, I think Warren Buffett put something like $40 billion into Apple, and it has gone up a great deal. However, it does make you wonder, who is he going to sell his 40 billion to? I mean, where's the future demand for Apple stock, and based on what? And the same thing can be said for really pretty much all his holdings. I mean, he's been cutting down his huge position in Wells Fargo, and look at that stock. That stock's been destroyed.
Absolutely, yeah. And I know he bought a bunch of oil stocks back in like 2015, 2016, back when they were pretty much at their peak, and they've crashed absolutely over the past year or so. So yeah, it's not looking great.
Right. So, I mean, Berkshire Hathaway is an important company in the cap-weighted S&P 500. So the S&P 500 equal-weighted also has its issues because there are so many non-America 2.0 stocks in there, stocks really of the previous generation of sort of the previous generation of the world, Ian, right? Essentially.
Yeah, exactly.
Yeah, we are not bullish on the S&P 500 cap weighted. I just want to make this very, very clear. And we would be very, very careful about just throwing your money into an index at this point, because it does matter today. You can no longer say or think that just by putting your money into ETFs like SPY or QQQ, well, what are the others, that DIA, these are all market-based ETFs that essentially give you exposure to this index, that you are going to keep up or get really exposure to the parts of the stock market that are rising. And we would tell you, if you're interested, you can obviously pursue the S&P 500 equal weighted. The ticker symbol on that is, Ian, what's the ticker symbol on that one?
It's RSP.
RSP. That's for the equal weighted S&P fund. You can put your money into that. At least you're going to do better in our judgment, in our opinion. Remember, we're not financial advisors. Anything you do, it's on you rather than on us. Up to you what you choose to do. That'll give you a shot. The other one, you said, we would say, yes, we're pitching ourselves. Profits Unlimited. This is our flagship newsletter. Goes for anywhere between $49 to $99, depending on what offer you choose to pursue. If you're interested in that, we focus exclusively on America 2.0 companies. We simply never even look at the types of companies like Apple, Microsoft, Berkshire Hathaway, anything like that. Exclusively focused on fourth industrial revolution companies, America 2.0 companies, innovation companies. Look for the link below and it will send you to a page where you can find out more and also subscribe. All right, Ian. Despite what is going on with Apple and Microsoft, it's really interesting that there's entire groups of companies every day, certainly like the Profits Unlimited equal weighted portfolio based on the record date is up 45% for 2020, 45%, Ian.
Yeah, first, I think the S&P 500, the regular cap weighted one is up like 6%. So
Right.
yeah, America 2.0 stocks have been crushing it. They did, of course, go down in March with the rest of the market. Everything got sold off. There was total panic, total irrationality in the market. But since then, I mean, they're up like hundreds of percent, and 45% for this year is how crazy it's been, is pretty remarkable.
Yeah, it's a fantastic, and it really shows you that a focus on growth, opportunity, fourth industrial revolution, America 2.0, it's never been more important. And yes, we are definitely pitching ourselves. Nonetheless, we would tell you for $49, $99, take a look at some information, because we can tell you, other than Kathy Wood at ARK Invest and us, there's no one that really talks about this relentlessly in this way. Everyone is still very much, I would say, 75, 80% in America 1.0 in the old world, maybe even 90%. Certainly the main sites like MarketWatch, Yahoo Finance that people rely on. And at one point in time, were actually decent sources of at least some amount of information. They're now completely and utterly unreliable.
Right. I know. Yeah, it's crazy. And you've got such like a difference between like companies that are worth $1 trillion versus companies that are worth like 5 billion. So, I mean, which one do you think is going to be easier to double from here? The ones that are disrupting and are way smaller, or the ones that are bigger, more well-known and getting disrupted? So, I mean, obviously you're at an advantage when you buy companies that are innovating, especially right now, because the demand for these companies has never really been higher. The demand for the old world dividend, safe companies has almost completely going to be gone very soon.
Right. And with that, you'll see demands for these stocks peter out. And then you will see what happened with ExxonMobil. We'll see what happened with Wells Fargo, which is these waterfall declines, which simply indicate that there is no bid. Nobody is coming to buy as people are putting large blocks of blocks of stock up for sale. There are no buyers. And as a result, they keep having to cut the price of what their people are willing to take, which is why you see these waterfall declines in all of these stocks. And we won't steal Amber's thunder, but on Monday, she's going to tell you that the state of the recovery, and you and I, we know this because we focus on so many different things that, again, market watchers of the world focus on. However, the Port of Oakland, Ian, just reported their best September in 114 years since the start of the port itself. In other words, the amount of economic activity that's flowing through the ports, and that's true for New York, it's true for Oakland. Shipping rates are like on fire, pretty much actually around the world. However, you would never know any of this, Ian.
Yeah, I know. All the mainstream financial news focuses on whatever the worst possible thing is, because scaring everybody and saying like listen to us is a good way to get viewers and clicks.
Right. I mean, really pandering to people's fear is clearly very profitable for a lot of the mainstream media, mainstream, whatever kind of stream they are, sites. All right, we've kind of done the stock market. Do want to make this clear. While we are negative on sort of the indices, there are America 2.0 stocks that are rising, and there are people making enormous, extraordinary amounts of money, yes, in this current stock market, including our readers across our services that are doing phenomenally well. Our mid-cap service is up in excess of, I don't know, it's probably somewhere in the 60%. The small cap is up somewhere in the 80, 90%. Ian and I run two option services. What are the streaks in Rapid Profit Trader that we've had this year?
I know over the past, I think we're of closed trades, we've won 38 out of the past 39.
And then the reason for that is that we focus exclusively on stocks that are rising, which are these fourth industrial revolution stocks and America 2.0 stocks. All right, we've beaten this to death. So let's move on to Bitcoin, which finally jumped that $12,000 hurdle and does look like a very, very strong bid underneath Bitcoin. Like there's really no more cheap Bitcoin for sale.
Yeah, we just had the highest closing price for a day, I believe, either the first or second highest closing price since 2018, like when Bitcoin was coming down from 20,000. So super impressive. There's a bunch of Bitcoin continuing to come off of exchanges. And out of the 18.5 million that are in circulation, only 2.5 million are on the exchanges at this point. And I mean, they're going to run out before the next halving at this rate. Like literally, I did the math on that. And I mean, if people keep hoarding Bitcoin, taking it off exchange, planning on holding it for the long term in like a private wallet or something, I mean, it's going to be a serious, serious shortage, even more so than right now.
Right. And you know that trend of companies putting their treasury, in other words, their cash from the balance sheet into Bitcoin, and then it will be others for sure. So eventually somebody will be like, well, we're also going to diversify into Bitcoin Cash and Litecoin, the other store of value cryptos. And then very naturally, a much larger market is going to unfold for the platform, sort of blockchains, Ethereum, Ripple, Lumens, and then now I don't know, is it up to 100 DeFi coins that are out there?
Probably. Yeah. There's new stuff coming out every day. I just saw one called Harvest Finance that has like $800 million of investors' money in it. So, I mean, people are pouring money into these new projects. I mean, for better or for worse, I think they're going to stick around. You know, a lot of them are already pretty much established, have gained a lot of people's trust, and are running really, really well, you know, despite all these other companies taking up room on Ethereum, which is basically the Android of crypto, where all these financial apps run. I mean, there's only a limited amount of space in there, but even though we're seeing all these projects and apps cram into this space, I mean, everything is still running remarkably well. So it's a system that people are probably still unsure about overall, but so far it's doing very well. And it's definitely the future. There are going to be kinks in everything, but it's going to get worked out. And you know, this is where money is definitely flowing.
Right. Some of these DeFi coins, which by the way stands for decentralized finance, we believe are ultimately going to take over a number of functions that exist in the world today of finance, banking, insurance, in many different ways. And some of it may seem sort of unbelievable to people. However, I would tell you that even as little as 5-6 years ago, the idea that you could even have a car that has the level of autonomy that Tesla has currently seemed a little unthinkable. And even the idea that, like, you know, the number of retail stores that are going really bankrupt, I mean, it's hitting new highs. So many of the things, the disruptification of the world that increasingly seemed at one point in time unbelievable is now increasingly believable. And with that, we believe you're really going to start to see the decline in a lot of things. And I believe Bitcoin is going to take share from gold, going to take share from the currencies of the world. And now these DeFi coins will come and start to push in applications like what you were talking about this, what was the name of the coin again? Harvest
Finance.
So it reminds me a little bit of the other one, yield finance.
Yearn
Finance, that's right, which sort of arbitrages between all the various DeFi coins that play a yield.
Yeah, so basically the idea with that one is you put money into this system and it invests it in whatever coins have the highest interest rate. So whereas you put your money in a savings account and it gets nothing, you can put it into Yearn Finance, which is basically an app on Ethereum, which is, again, like Android, just like on a phone. It's pretty amazing what you can do with these apps and the innovation going on right here. So if you put money into Yearn Finance, you can, I mean, earn like 6 to 8% at least on a lot of these coins. It's pretty amazing, and that's why we've seen so much money flow into DeFi projects. And I think now it's up to almost $13 billion that has come into this, and it was under $1 billion just a few months ago.
And the fact that, generally speaking, the world of crypto does still very much follow the direction of Bitcoin. There's always something that sets sort of the trend, the direction, and the fact that Bitcoin, the high, I believe was yesterday, was about 13,300 approximately. It's now tracking, I think, a little bit under 13 right now. However, the fact that it's now made essentially a 1 year, is it past the 2019 high?
Yeah, actually, no, it got up to about 14.
It got up to about 14. We're very close. And, Ian and I are on record as saying we think that Bitcoin could hit 50K this year. If it doesn't hit it, I still believe that it's on its way to going past the old high of approximately 20,000, then to 50, then to 100. And we believe in the 2023, 2025 timeframe, you could see $250,000 per Bitcoin. And I know we've been called crazy and mad and all this stuff. Nonetheless, this is what we believe. This is what we think. And we'll just close crypto discussion here. We'll say, hey, everything is going in the right direction in terms of price, in terms of adoption, and in terms of innovation. Everything is really going the right direction for crypto.
Yeah, for sure. And finally starting to see that reflected in the price. But I mean, it's just scratching the surface.
And there's trillions and trillions of dollars, whether it be from gold, from largely junk currencies that are issued by countries around the world, and then trillions and trillions of dollars still caught up in banking, insurance, finance, monetary instruments that we believe over the next 5, 7, 10 years, they are all going to get wiped out, just like Amazon has wiped out retail. All right, let's go quickly to cannabis, where we've seen actually quite a bit of a rally starting to unfold. Canopy has started to go up. Some of the others start to go up. And this is what we've been expecting for some time, truthfully.
Yeah, exactly. So, Canopy just made I think a 52-week high. If not, then very, very close.
Very close. It's very close.
Yeah, and I mean, if even for months now, we've seen some of the other like lesser known ones like Cureleaf and Trueleaf and Planet 13 making all-time highs. So there's definitely a resurgence in the works for cannabis stocks, and sales are still increasing for a lot of these companies. A lot of them have reached the bottom, they're past it, and they're going to just grow from here for sure.
Yeah, and some of these companies got really decimated. Their stock prices were so decimated, well past the condition of their business. And that's because the cannabis trade got super hyped, people piled in, and then this is what usually happens, which is that as the businesses are actually starting to really have a business model that works, an organization, operational structure that works, and where really there is going to be extraordinary rising sales relative to their business, people now are so invested in it that they really liquidate their holdings, and now they miss out on the true boom that's there. We saw that in 1999, 2000 with the Amazons of the world. And I believe this is probably going to unfold for many people who are going to be like, hey, I bought in, I was down 80%. I'm never going to make money. The truth is that we have seen 80% declines in things and seen these things turn back around and then make people hundreds and hundreds of percent. And it certainly happened with Amazon, and certainly happened with many of other stocks where there is something real and significant and growing in a business.
Yeah, exactly. And like, is the cannabis industry going anywhere? Absolutely not. Are some of the businesses, did they get hurt more than others? Absolutely. But none of the big ones at least have gone bankrupt. And they're not going to at this point because they're like at the tail end of solving their issues. And their business is going to improve like exponentially from here.
Yeah, and you can see, I mean, the old world sort of, spirit stocks, beer stocks, wine stocks, largely speaking, are struggling to make new highs. Cannabis, we realize, is at a just recovering from post-crash low. However, I believe look out 1, 3, 5 years. I mean, those old world America 2.0 stocks are going to continue in decline because there is no real appetite to continue buying those stocks. Meanwhile, people are going to come, will be folks in the millennial generation, Gen Z, and want to buy cannabis stocks and will bid them higher.
Absolutely. Yep.
Anyway, okay, so we've done cannabis. Let's quickly go to Tesla. They released their earnings. We quickly looked before we got on. You can go first, and I'll give some of my impressions.
Yeah, so amazing earnings report from Tesla. They set new all-time highs in production for auto production, auto deliveries, sales, net income, free cash flow. They said that there is a full self-driving beta for their cars coming out this year. They said that the solar roof business is going great, and Elon actually said next year is when we're really going to see the full impact of that. So that's great for their energy business. And then, of course, with their auto bidder for batteries, more people are using that, and especially more businesses that have big Tesla energy storage products. They can actually kind of harvest their energy in those batteries and then sell it back to the grid and make money off of it. So individuals can do that too. If you have a Tesla battery at your house, you can actually make money from storing your electricity in there and selling it back.
Yeah, and then the Cybertruck update is for them to deliver it at the end of 2021 or early 2022, which you and I are personally thrilled for ourselves,
Yeah.
for that to come. The other crazy part is again how deliberately misleading many analysts, journalists, reporters are on Tesla. They continue to talk about Tesla as if it is only a car company, incomparable to other car companies, even though I actually did see a report saying that many of the car companies are now so far behind. I believe it was Jim Cramer actually that said that Tesla it really has no competition yet. There's the emergence of the tiniest first bit of competition, or no one that is at commercial scale. Like Lucid's cars look pretty cool.
Yeah.
And they've got mileage, they're batteries. However, they have no plan to make these cars yet. They got to raise all that money to build the plant up. They've got to face up to investors and go and get all that cash. Whereas like Tesla is completely in growth mode. So there's this one analyst from says Roth Capital Partners from Craig Irwin who says that the company, referring to Tesla, is still valued incredibly richly, like it's operating in a vacuum, yet competitors are working furiously to catch up. And I truthfully, when I look at the actual competitive landscape, especially when you consider Tesla's multiple businesses, EVs, obviously, autopilot as software, which maybe over time they might license out to other people, robo-taxis, which drive off the autopilot software development. Then there's the various parts of the solar business, solar roofs, solar power, the battery packs, both retail and industrial. I have no idea what they're talking about, Ian.
Yeah, I know. Yeah, it's crazy. And, people talk about, like companies like Lucid, and then there's Rivian, who is going to have a pickup truck. And it's like, there might be, a million people that want a Rivian pickup truck, but even if there are, they can't make anywhere near that amount. Tesla now has many, I think 4 or 5 gigafactories that are done or in progress of being done. They're going to make 500,000 cars this year. They're going to, their goal is 20 million by 2030, 20 million cars in just 1 year, only 10 years from now. And a lot of those are going to be Cybertrucks. And, companies like Rivian have a lot of work to do if they even want to start to compete with that. And, there's a lot of startup EV companies, and sure, a few will make it, but there were a lot of startup regular car companies back in the early 1900s. And as you can see, only a few emerged, and none of them were horse and buggy makers.
Yeah, right. And it was actually in excess of 1,000 plus car companies when, it became clear that that was the future of transportation. And to make clear, Rivian, Lucid, whoever you want to talk about, no gigafactory, no existing operating autopilot software, whether in beta or real. These are all right now theoretical concepts. And Tesla is really years and years ahead of everyone. And then, of course, there's no energy business, no battery business of any kind. So we are, just to recap all of this, bullish, optimistic, positive on Fourth Industrial Revolution, America 2.0 stocks. Check into Profits Unlimited if you're interested in our views on it. Same thing with crypto across the board. We think this is a huge area where we think prices are going to rise. And then on Tesla and cannabis as well. All right, Ian, we've done the whole roundup. Any last comments before we say goodbye?
No, I think that's it for me.
All right, goodbye from you and then from me.
All right, everybody, happy Friday. Have a fantastic weekend. And thank you so much for watching.
Once again, I want to remind you, check into Amber's Monday Market Talk, where she's going to cover the 3 R's of recovery. So check into that. That will be on Monday. And if you click on that bell, we'll notify you the moment any content comes on. And with that, this is Paul saying bye.